You're watching us here on Chartbusters. The first hour looks rather wobbly. We had seen a positive open. Thereafter, there was a bit of a decline, and then now the market, is stabilizing around that 17,700 mark itself. There's, the low point of the trade for the index. There is weakness. There is some volatility in sentiment, though the mid-cap index is doing well. I'm Mangla Malu. With me, as always, Nigel D'Souza. But we do have a fair amount of earnings on our radar today. Quess Corp is the stock which is in focus as the company's posted a subdued set in the third quarter. Revenue growth has slowed down to 21% from the 33% that we saw in the last quarter. They've also seen margin contraction owing to increased investment, salary hikes on rising spend on travel. We have with us Kamal Pal Hoda, who is the CFO of the company, joining in. Thanks a lot, Kamal, for joining in. And that really is, what we'd like to understand from you. Can you talk about the impact of IT slowdown, slowdown in IT hiring, because your overall headcount is up just 20% as against 26% earlier. Revenue growth too has slowed down into 20s versus 33% earlier.
Good morning, Manglam, and thank you for having me. And yes, you're right. I seems to be having a subdued demand right now, and the business environment for the quarter was muted across all sectors. Seven except, there were some big wins in BFSI and manufacturing, and these two sectors continue to grow. These two sectors also have a very good positive outlook for the upcoming year, especially with the announcement of significant investments that the government has committed in manufacturing, which also leads to additional credit with the banking sector. And these two sectors, we are pretty hopeful that will continue to, grow and expand for us in next subsequent year.
Okay, so could you give us some kind of guidance then in terms of what kind of growth should we be looking at going ahead? And also give us a sense about how was festive hiring? We had team leads who had joined in and they said that it was a little bit weaker. Your sense?
Sure. So let me answer. In terms of guidance, see, the current year, despite, the muting which was there across all sectors, our revenue grew 21%. On a year-on-year basis and a 4% on a quarter-on-quarter basis. The EBITDA also grew 8% on a quarter-on-quarter basis. So I think we've done reasonably well, especially the kind of environment which is there externally. As far as your question on demand is concerned, we saw a peak demand going up to almost 36,000 open positions, and that was in the month of September and October pre-Diwali, which happens. It was at its peak in that month. Now, typically, Diwali this time again being pre-poured in the October and not being in November, the headcount came down significantly in November and December. Having said that, on a quarter-on-quarter basis, we were able to maintain a flat headcount. And the sectors that help us, which I already called out, were BFSI and manufacturing as far as general staffing is concerned. In our OEM platform also, we added 4% headcount on a quarter-on-quarter basis.
So can you give us some more numbers, Kamal? In the fourth quarter, should we expect headcounts to reduce from the 26-27% that we've seen and lower than the 20% that we saw in the third quarter as well? Or will they claw back to the 20% plus? What's a sustainable rate out there? That's point number one. And secondly, on margins, when the costs were lower as people weren't moving around as much, you hit margins closer to 5% as well. But over the last few quarters, we've seen your margins decline. You're trying to address this by, hiring consultants, by reducing your SG&A, sales and general administration expenses by about 50 basis points. So what sort of margin band should we work with and what sort of headcount growth should we expect?
Sure. So to your question specifically on quarter four, we believe this, muted growth which is there will continue, especially on the IT and ITS side. And definitely manufacturing and BFSI, we expect the growth momentum will continue, which should put Quess probably, exiting again at a 20% growth on a year-on-year basis as far as quarter four is concerned. On our cost and EBITDA margins, I think you picked it up right that, the addressable areas of cost we are working upon. So we are trying to bring down our SG&A cost. And in terms of margin contraction, I think one big call out there from a year-on-year basis is the investments that we are doing in our product-led platform. In Founded, earlier called as formerly known as Monster. So we've rebranded and we are converting this into, from a job portal to, an entire end-to-end talent management platform. This year, on a year-on-year basis, we expect at least a 90 crores of an additional investment vis-a-vis last year. which is also one of the primary reasons if you see our consolidated margins coming down. Now, on that particular platform, we expect Sir of the Founder to actually do break even by the Q4 of next financial year, which is where we would see margins coming back to the levels that we used to do earlier. Additionally, there's a lot of work internally being done in terms of right sizing our cost base, which is also shown some improvement in our margin by 10 basis points on a quarter-on-quarter basis.
How much more is pending with the strategic engagement with BCG? I mean, could you give us a sense? What's the mandate given to them? What's the target? Do you have a ballpark number there?
Sure. So see, BCG is a strategic engagement. It's not just around cost. It is around multiple areas. It's around also, helping us, work on qualitative growth. And it's a assignment, spanning over Q4 of this year and Q1 of next year. We'll love to share more around this assignment after we've done some significant amount of work along with BCG.
Okay, all right. Thanks so much for stopping by and giving us all those details. Wishing you a good quarter ahead. We look forward to touching base and getting a quick update. Hopefully, business recovers well as well. Well, that's the management of Quess Corp. But for the time